Aggarwal now joins us. Amnish, what do you make of the recent rally as far as FMCG pack is concerned? Do you think after 4 years of complete flat move from the larger names, it's time to look into these consumption plays?
Uh, you see, if you look at say last 3 4 years, whether you look at HUL, whether you look at ITC, some of the players they had not moved at all. And particularly ITC, I think it was because of more your taxation and other structural issues, I think, which are now getting more or less sorted out. Because last 3 years we had not seen any increase in your taxation meaningfully. So the stock has actually come up, it has rallied, other segments are also doing well. And we believe that there is still room for an upside. Our target price is close to 440 rupees. And I think the kind of momentum we have seen in the cigarette business in the past few quarters, if the next couple of quarters are good, then we could see the, if the next couple of quarters are also good, we could see the momentum continuing in ITC. Now, as far as HUL is concerned, I think the rural demand has been tepid. The profit growth has suffered. The what works in favor of HUL currently is that currently their gross margins are down by nearly 6 to 7% from the peak. So while the value growth might not be there in the near term, your margin expansion should happen. But at the same time, we are cautious on the overall demand and the rural demand, given the your risk of El Nino and the consequent increase in inflation, because that can actually delay the recovery as far as the rural demand and in particular and general demand is concerned. So to that extent, I would say that both these stocks can give you moderate returns from here, but definitely the momentum currently seems to be more in favor of ITC than HUL.
Okay, so prefer ITC versus HUL at this point of time. Amnish, a lot of buzz around the pharma sector as well, and of course the flashes for you at the bottom of the screen, wherein Serum as well as Biocon have decided to restructure their earlier equity deal of 2021, and as per the new arrangement, both the companies will see an equity investment in BBL to the tune of around $300 million, and this will provide BBL the additional product offerings for global markets as well. So prima facie, it looks like a bit of a positive coming in for Biocon Biologics as well. We'll try and analyze that in detail. But before that, Amnish, your take as far as how the pharma sector is placed at this point of time and which would be the top recommendations?
You see, pharma sector has been on the sidelines from the past, I would say, few quarters now. Mainly because post-COVID, we had seen very sharp recovery in the sector and profitability has also zoomed. Now with the margins also normalizing, the sector has practically not gone anywhere in the last 12 months or so. Now we have seen yesterday IPCA and Unicum coming together announcing a deal. So I think there is some M&A activity which is happening and which might happen in the sector. Broadly, we are more positive on the broader healthcare, which includes hospitals, and we are not that gung-ho on the pharma name because of the lingering uncertainty which continues to come from the US FDA standards also. But if one wants to go into the pharma space, then Sun Pharma and JB Chemicals are the two stocks which we are preferring at this point of time.
Okay, meantime, Amnish, it's a result-heavy day as well. You've got a whole host of numbers that the street is anticipating, and among those, you've got Tata Consumer, Nestle, as well as Bajaj Auto. If we were to watch out for Bajaj Auto in specific, how are you looking at the outlook when it comes to the company's margins? What are you penciling in by way of export growth, and what do you think the street wants to look at closely?
You see, the main thing is that if you look at, say, Bajaj Auto or any of these two-wheeler names in particular, I think the past couple of months or couple of quarters, they have not been that encouraging. But having said that, I think we are, I would say, not very gung-ho on the two-wheeler names as of now, because we believe that two-wheeler is a space which is going to see maximum disruption from the EV. And to be a very big player in the, you can say, big success and to give a very strong return from here, you need to be a very strong player in EV, which is not there in the case of Bajaj Auto. Now, as far as your export business and margins are concerned, I think the margins overall, because of the softer commodity prices, they have been coming up, but the export demand also remains, I would say, more or less mixed. So Bajaj Auto, as of now, is more like a hold kind of a stock for us. If you ask me, if you want to really play two-wheelers in terms of any expected increase in the demand from rural India in the coming 3 to 6 months, then Hero would be a better bet given the lower valuations, as well as the fact that the stock has not gone anywhere from quite some time.
Right. Also, let's hear out Sanjeev Bhasin. We spoke to him earlier regarding his top bets in the Indian markets at this point of time.
Who thought DLF and Godrej were beaten down to pulp? They'll be up 40% in a month. If you recollect, closer to January, we had given those as two of our topics. Now coming to numbers, ICICI numbers are superb. I mean, look at the gross formation, look at the lending, look at the cost of money, look at the NIMs. I think ICICI is going to 5 figures in the next maybe 2 weeks. There's no question about that. There are no two ways that India is going to outperform, and I'm very, very optimistic. By May, we should be closer to 18,500 on the index, and more than that, stock specific outperformance will continue.
Okay, so that was about ICICI Bank and how Mr. Bhasin is quite bullish, hoping to hit the 4-digit mark in the next 2 weeks itself. But talking about some of the other counters which will be in focus today, Persistent Systems reported its numbers as well. It's a decent set coming in because the constant currency growth came in at 3.5%. The dollar revenue growth was around 3.9%. The good news was that the top client contribution has actually improved over the last 2 to 3 quarters. We had seen that the top client contribution was getting narrower, so that has come back, and the deal wins are also quite steady at around $400 million. But Amnish, what's the best way to approach IT at this point of time? Because clearly it's the large cap IT which is disappointed, but whether it's Cyient, whether it's Mastech or even Persistent today, they have managed to do better. Is it only a lag effect, or mid caps are likely to do better than large caps?
Okay, you see, IT structurally we are very positive on this sector because the salience of IT and the importance of IT in each and every activity is only going to increase in the longer term. Now, as far as mid-caps are concerned, if you can recall, maybe say 12 to 15 months back, the valuation of mid-cap IT had actually run much ahead of the large-cap IT stocks at that point of time. Now, the performance of, say, mid-cap IT companies, for example, if you are talking about, say, Cyient is more into, you can say, very niche segment. And particularly the segment of engineering design services, we are very positive on that segment. But when it comes to, you can say, the other IT companies, yes, Infosys has disappointed, TCS was okay, and now the Persistence, as you say, has been also reasonably good. So I think it is actually the time to look at IT stocks, because the stocks are beaten down. They have come up from very high valuation which they used to command, say, 12 to 15 months back. And I believe that this is only a transitory phase. The Indian IT stocks and the you can say growth rates will bounce back, and all the good IT companies, I think at the current valuations or maybe in the next 2 to 3 months, it will be a very good time to accumulate IT stocks.
Okay, meantime, Amnish, just curious, I don't know if you track Z Entertainment within the media space, but after a fairly long time of the merger talks being initiated, it seems like, finally there's light at the end of the tunnel with the talks with creditors to close the merger now emerging. Your view on Z Entertainment and what this merger could potentially mean as a key catalyst?
You see, the main thing is that all the hurdles which were there in the merger of Z, they are slowly going off. Now, the merger of Z and Sony will create like a media behemoth which will actually be competing with Star head-on. And however, I think what it gives to the investors is much more transparency, much more credibility, because once Sony comes in, people will expect the balance sheet to be in much better shape than what it has been historically. So that calls for some sort of a positive view and re-rating for the stock. Having said that, if you look globally also and in India also, in the next 5 to 7 years, there is likely to be a significant transition which will happen in the media business or the entertainment business from the broadcasters to the OTT platform. So in the long term, it will depend upon how Z5 and Sony live and the entire ecosystem of this OTT based, you can say, presence of the company plays out. However, if you look at this merger in particular, this merger is positive and the risk reward in the stock remains favorable. And I think over a period of time, if they gain on the OTT side, then there is a scope for making decent money in the stock.
Okay, decent money could be made on a stock like Z Entertainment at this point of time. Amnish, your take as far as Bajaj Auto is concerned, because exports have been weak and we know that, but the management is now saying it's bottomed out and all eyes will be on the margin performance, right?
As the margins, as I said earlier, they are likely to be good for all the auto companies because the raw materials have been benign and the YOY growths have been reasonably good. As far as export markets are concerned, I think in the near term it looks good because the base is favorable. But then you see, Bajaj Auto needs to be, I think, one thing which will work for the stock in the medium term. One is your three-wheeler space where they need to catch up, and the second is the EV because they are very weak player in scooters as such. So in terms of numbers should be okay. Exports outlook seems, I would say, relatively mixed. But as I said, that if you want to look at two-wheeler space, I think TVS and Eicher, they have been doing far better. And in terms of valuations, I think Hero is the cheapest stock to look at.
Amnish, also wanted your take regarding consumer durables because today there's a news on Crompton Consumer wherein the leadership has changed. And secondly, there are updates coming in for Whirlpool as well, wherein the numbers for the global parent was announced and the Asian performance looked a tad bit weak. Given we're all talking about an improvement in the real estate cycle, would consumer durables follow or the valuations are still expensive?
You see, consumer durable valuations have come off the highs because after first wave of COVID, the sector had seen massive re-rating. Now, if you look at, say, particularly Crompton Consumer, the Crompton Consumer stock in the last 12 to 15 months has been significantly derated because particularly post Butterfly, there is some debt which came into the balance sheet. The numbers, they have not been that great. They faced competition in a couple of verticals of there, particularly in the pump segment, they have not been doing well, and lighting, they have not been that aggressive and major player in the past. So I think Crompton has got derated in the last 12 to 15 months, and now this management change which is happening, I think Crompton needs to look at in a very different manner because this is a board-driven company and there is no promoter of the company per se. Now we were hearing from quite some time that you can say that the company is not working in I would say, in a singular manner. Now with the Butterfly merger also announced, I think a lot depends upon how the things go from here in terms of growth. Because Crompton, if you can recall, even a couple of years back, they had perhaps the best EBITDA margins in the industry. Now for the stock to bounce back, I think it will take some time. We need to hear more from you can say, the new management, because Mr. Shantanu Khosla will also be now more like, you can say, he will be guiding you can say, operations. So it is more like a wait and watch for us as of now. Yes, the brands are strong and the company has done a lot, particularly after the acquisition by Temasek and Advent. The way you can say, pushed up their margins, their go-to-market strategy, which was spearheaded by Mr. Shantanu Khosla and Mr. Matthew Job. Now let's see how the things pan out. But definitely, this is a stock which has suffered massively in the last year and a half. But definitely, there is very limited clarity as of now. Now, the second name which you talked about was Whirlpool. I think if you look at Whirlpool in particular, I would say that the company in general, and if you say your refrigerators or all the cooling products, including ACs, they have been suffering in the last year and a half because of the seasonality factors. Now, as far as the parent company is concerned, Asia is not a very big part for them. But having said that, Whirlpool in India has also not been doing that great. And I think now with the summer season picking up this year well, so there is a possibility of some bounce back happening as far as the fortunes are concerned. But definitely Whirlpool is not a leader as far as the refrigerator segment is concerned. So they had acquired Elica, which is a good business. But again, Whirlpool, I would say, is also on the sideline from quite some time. The stock has reacted from something like 2,800 of a peak. It's currently around 1,300 levels. However, I think the company needs to perform. The numbers have to come. Summer season raises some hopes, but there's a lot more delivery to come from the company before the stock can see any major re-rating to it.
We let you go. Top mid-cap ideas?
Okay, so in the mid-cap space, we have been quite positive on few of the QSR names, particularly Westlife is one name we have been very positive about. Then in other mid-cap ideas, you can look at VIP Industries, which has corrected from say 700, 750 odd rupees to current levels. Then in the building material space, you can look at say Prince Pipes. This is another name we are very, you can say, gung-ho about. And although the near-term uncertainty is there, but you can look at say names like, for example, Sumitomo or PI Industries on the agrochemical space. I think these are some of the, I would say, mid-cap names which we are very positive about.
All right, thanks so much for taking time out and joining in. Good to get those mid-cap bets and, of course, your views on the markets. What's happening with the